A couple of weeks ago, I posted a video of how I was able to save $100,000 and how I have all of that money invested in stock. So in this video, I'm going to be sharing with you what exactly that money is invested in. Hey guys, my name is Adrienne. Welcome back to my channel. If you are new here, I make videos every Monday on all things investing. So if that's something you're interested in, definitely go ahead and hit the subscribe button below. So I just want to put a disclaimer out there. This is personally just how I invest. I'm sure this is probably not what every single financial advisor would tell you to invest, but I'm just going to show you what I do. My investments are definitely riskier than probably any financial advisor would tell you. And I'm starting to learn more about what it means to have a more diversified portfolio. So I'm probably going to be taking you guys along on that journey. So if you're interested in that, go ahead and click the subscribe button below. And I also want to note that I definitely don't have to be sharing my entire stock portfolio. It's definitely something more vulnerable that people don't tend to share, but I already did share a lot in my previous video. I also just want to show you that I do truly practice what I preach. So I would really appreciate it if you are watching this video that you go down and click the like button and hit that subscribe button below. And with that being said, let's jump right into it. So this first little pie chart here is an overall look at my investment portfolio broken down by my account. So obviously you can see that I have about 46% of my funds are in a brokerage account, and about 21% is in a Roth 401k, and about 30% is in a Roth IRA. I also have about 3.5% in savings, and that totals a little over $100,000. And one thing I want you guys to notice is about half of my investments are in Roth accounts and half are not. I know a lot of people say Roth is better than traditional or traditional is better than Roth, and I'm still trying to really figure out if it's even like a balance that's best. So the order in which I got each account are: first, I got my brokerage account when I turned 18 in 2013, and that's with Fidelity. My Roth IRA is also with Fidelity, and I opened that in 2017 when I was 22 when I started working. And my Roth 401k, I actually first had a Roth 403b, and that was through Mass Mutual with a previous employer, and that was opened at the beginning of 2019 when I was 23. That Roth 403b rolled over into my Roth IRA when I left my employer. With my new employer, I have a Roth 401k, and I have that Roth 401k through Voya Retirement. And then obviously my savings is split between a money market account through Fidelity, and I also have some in savings and checking accounts in my bank account. You can see that all of my accounts are in pretty different places. I think that's pretty true of most people, especially if you are working and your employer is the provider of your retirement fund. So this is an overall look at every stock that I'm invested in my entire portfolio. So this is not broken down by account. Since what I'm invested in is an overall look at my investments, I didn't break it down by account. And I know this may look scary, but I will break it down for you. And this is also where my first rule of thumb comes in, and that is to not ever invest more than 10% of your money in any one place. So I'm actually breaking that rule right now. I have about 13% invested in Exxon, and it actually looks like I'm breaking that rule with VTI and in my cash, but cash is a little bit different. VTI is actually an index fund, so that money is already diversified within itself. Since I am breaking the rule with the Exxon stock, I'm hoping that I will just save a little bit more money since I'm really close to that 10% mark, and just invest that so it will even everything out. So these are all of the stocks that I'm invested in, broken down by the percentage, and then I categorize them by if they are an individual stock or some sort of mutual ETF or index fund. So obviously I have 11.5% in cash. That's a combination of my emergency fund and just cash that I keep in my bank account. The next 5 stocks that I'm invested in are all individual stocks, and I didn't start investing in individual stocks until probably a couple months ago. It's not something that is recommended you do, especially if you're just starting out. The individual stocks that I'm invested in are Disney, Exxon, Target, American Express, and Lululemon. One thing I'll note is that the individual stocks that I'm invested in are all corporations that I love and I truly believe in. So I don't just invest in any stock that is hot on the market right now, like Tesla. I don't understand Tesla, so I'm not going to invest in it. Obviously, I could research it more, but it's just not something something I'm interested in, so I don't invest in it. For me, Lululemon was one of the stocks that I was most interested in, and they were doing so well, and I had done research on them, and for me, I just personally wanted to invest in them because I believe in the brand. All of the stocks in blue are all mutual funds, ETFs, or index funds. These are a combination of funds in my brokerage account, my Roth 401k through my employer, and my Roth IRA. So some of these, especially in my Roth 401k, I didn't have much of a choice. My employer has a limited selection of things I can invest in, but I've broken them down by type. There can be small, medium, or large funds, and then there can be growth, blend, or value funds. Small, medium, and large just defines what the market cap of the fund is. So right now I'm only invested in medium and large market caps. Also pretty diversified in the type of fund that they are. So I did a whole video about what value funds and value investing is. If I'll go link it up here. Growth and value stocks are just two different kinds of stocks and how they are growing in the market right now, and a blend is just a mix of them. This is where I would tell you my second rule of thumb is to never invest in something that you don't understand. Like I was saying before, I invested in those individual companies that I truly understood and believed in their product, but that also goes for funds as well. If you don't know what you're invested in, then how are you ever going to grow your money? Warren Buffett doesn't invest in tech because he doesn't understand it. I'm sure he's tried to understand it. He has stuck with investing in things that he understands. These are all of the mutual and index funds and ETFs that I am invested in. So the first fund is the FSMAX. It's an index fund that provides full exposure to the US stock market, and that's more so than just the S&P 500 index fund. This is one that's actually invested through my 401k, through my employer. Like I said before, there aren't as many options as I could have if I were just investing through my brokerage account. The next fund that I am invested in is FTEC, and FTEC is an ETF that represents the performance of the IT sector in the United States. And ONEQ is the next fund. It's a Fidelity ETF that corresponds to the performance of the Nasdaq stock exchange. And the next fund is FSPSX. This is also a fund that I am invested in through my employer. It is Fidelity's international index fund that consists primarily of large and mid-cap European, Asian, and Australian stocks. And the next one is TRRLX. This is, I'm not quite sure of the name of this one, but I'll put it right down below. This is actually how my employer gives its match, so I don't have any control over this fund, but it's basically a fund that is managed based on what the projected retirement year is for whoever they're invested in. So this fund in particular is managed based on a retirement year of 2060, which sounds really weird to say because it's 2020. That's in 40 years. So I don't really have much control over this, but this has been basically free money for me because that's what my employer has contributed. The next fund that I have listed is VTI, and as you guys probably know, I've talked about this fund before, is the Vanguard Total Stock Market Index Fund. It's the first fund that I would tell anybody interested in investing to start with. The next fund is FIENX. This fund is a Fidelity International Index Fund, and the next fund is FXAIX. This is a Fidelity Index Fund that tracks the S&P 500, and the last one, which is SCHD, is an index fund which tracks the total return of the Dow Jones, and it's focused on the companies in the US that pay out high dividends. Don't invest in anything that you don't understand. Make sure, even if it's an index fund, that you know what you're investing in. Even with your index funds, you want to be varied, and there are so many funds out there. Just do your research of who's the manager of the fund and what kind of companies is this fund invested in. My third rule of thumb is to never get too caught up in the numbers. If you are watching your numbers every single day, you are going to drive yourself insane. The smart way to invest is to invest and let it sit for as long as it can. There's a quote that Warren Buffett says. He says that calling a day trader a good investor is like calling someone who has one night stands a romantic. And I thought that was so funny and so true, because you really need to let your money sit. There's no reason for you to think that a company valued at one price one day is automatically going to go up the next day. It just doesn't work like that. And another thing I want to note is that money is not everything. Money is merely a tool that has been given to me by God to to steward as if it is his own, which it really is. For me, saving money is not my goal. My goal is always to be as generous as I can. And so learning to save money has allowed me to be even more generous than I could ever imagine being. So I hope you guys liked that video. Go ahead and click the subscribe button if you found this helpful, and I will catch you guys next Monday. Bye guys.